Good afternoon, everyone. This is Trader Tim from E-mini Mine. Today is Monday, March the 20th, first day of spring, 2017. We're doing a market analysis video for the week. I have a feeling it's going to be an interesting week as the markets kind of broke down over the past 2 weeks, and not in the sense that we've broken a major swing low, but the market trend has completely shifted. As we talked about last week, we were going basically straight up without any pullbacks until the first of the month. And we've put in two hammers on the trading hours only chart. That being telling that as we've drifted down to the bottom of the previous resistance, actually, 2350, then acting as support, now acting as support again, as bulls have stepped in and pushed the market back up the two times that we've come down towards that level. That being said, the rally off of the hammer, both times we had the hammer on the 9th and then the hammer on the 14th. Both of those, the second one being a little bit more stronger, but the last couple of days have basically given back all of what that break had done. So today's low was one tick below the break, that big body candle. Markets aren't completely closed, but I think it's safe to say we've got a couple minutes left, and I don't think we're gonna break any lower. But so going into Tuesday, it'll be interesting to see which way we move. If we can open up outside of the range of today, which was pretty small, only about 10 points, that would be a good thing in terms of giving us some actionable trade setups. If we go out to a weekly chart, we can really see the consolidation forming. We've got strong big body candles, and now changing into the last 3 weeks. I'm not really including this week since it's still Monday, but the last 3 weeks have been more of spinning tops, sideways movement. And so sideways movement is healthy. We had the sideways consolidation at the end of the year going into January. And so if we can stay sideways and not pull back too far, over time, there will be different players coming in and leaving the market in this area, and we could get a squeeze higher. We could get new buyers coming in, but the current trend has really started to form the potential for a lower high, for a pullback. And if we break not only the low that we broke today, the 65.75, but if we come back and break 54s, that would be a much stronger reason to be skeptical about a move higher at this point. So what other lines in the sand can we use? We can pull a high to high, and that'll give us an extension. And it's not too much farther below the 50, the 2350s. It's at 2348.75. I'm not buying that with a limit, but I'm cautiously looking, seeing what kind of reaction occurs. If we come down to the 2350 again and we get another hammer, what could be a possible scenario is we get a horizontal support and then a descending triangle. And so we just touch the 2350s, bounce to the downtrend line, touch the 2350s, bounce to the downtrend line, get tighter and tighter until we can break that downtrend line. And at that point, that would be a strong buy signal to get long. And that could happen over a couple of weeks. It could happen in maybe as short as a week. The market would have to come down, touch 50, rally again, and probably come down a fourth time and touch that 2350. So every time we come down to 2350, I'd be looking for what's the reaction. Other than that, this week in terms of news, we've got Wednesday, nothing really tomorrow, Redbook, Wednesday, existing home sales, Thursday, jobless claims, um, Friday, durable goods. So not nearly the week we had last week. Market's about to close here in just a couple of seconds. So we'll hear the bell. But that's a very strong scenario here. And then that gives us two lines in the sand, the downtrend line and the horizontal 2350. So going into the week, I'd be cautious on the intraday. Typically after the Fed meetings, the markets get really good. Today's price action was okay. There wasn't, I guess you call it typical Monday. But judging by some of the emails and just my own trading over the last couple weeks, this consolidation has made for a very lackluster intraday trading environment. Even going back to the middle of February when we started moving sideways, then we had the gap up and then more sideways action. So these are the times to be very patient, to sit on your hands if you don't see any trade setups so that we can be active in these bigger runs. I mean, up until this point, boy, there have been some monster days in the markets that had really good actionable setups. You can go back in the trade recap videos and look at some of those. Go back to the live trading sessions that have been recorded. And, being aggressive during those times and just being active is what you want. And then in these times, it's very important to be patient. If you just come at it with you've been looking at the ES for 2 weeks and you don't see a whole lot of activity, give it 2 years so that you can go through those cycles of consolidation, bullish trends, bearish trends, and really get a good feel for the markets. So we'll be doing a live trading session tomorrow morning, Tuesday, and you can check that out, emoneymind.com/VIP.